So here we have the volume back on the chart. And I want you to take a look at how volume precedes price. So when price is trading at that $3 mark, I want you to take a look at what's happened. At this time, we've created a new high. To the left, we go right back to this price point right here. Okay, so this high, and now we have a new higher high. At that time, right here, this candle, we have a reference point of the volume in here. Now, there's going to be all kinds of spikes, and there's going to be variations of all that stuff, okay? But I want you to really use this tool, okay? Because I'm going to give you something here that has given me a great deal of X-ray vision, if you will, around key levels. I already know what levels should be key, but when I see volume supported, and you don't hear me talk about volume, okay? Only the folks that watch me do things with commodities ever see me do anything with volume. But volume precedes price. And what do I mean by that? On this high here, we have this volume bar right here. So this volume bar, and then we have a new high here. Okay, you see that? So we have this candle representing this volume, and then we have this new candle high, and we have slightly higher volume there. Now watch what happens when we create a new high. Over here, we have all this run up here, but now look what happens. The volume is way down here. That's way lower than that. Does that indicate new buying? No, absolutely not. What about the high up here? Look at that. Is that indicative of new buying? Volume should be doing something like this. It should be going higher. It's not. So look at the overall scheme of what's going on. We see price action going higher, making higher highs. But in the interpretation of volume, that should be seen with higher volume nodes. Is that happening? No. This is distribution. All of this running up is the longs selling out of their position, not new buying. When I gave $3 and $3.30, that has never been traded to by Ripple. But I gave you that specific level, and it was only off by a penny and a half. That's tight. For an asset class I don't even trade. I said that it wasn't going to go higher. We have an ICT bearish breaker in here. Price trades up into that breaker where we have this down close candle. We have a bearish breaker in here. So we have this high here. We have a new high here trading right to the level I called for, $3.30. And then we see the technical support with a breakdown in market structure, and then we trade back to the breaker here, and you have one more deeper retracement. I said, watch that $3 mark. Why? Because it's going to be a level of value. They want to get out of their long position around $3. They're not going to take their long positions off down here. They're going to drive it up and wait for it to hit $3, and then they can get out of what they couldn't get out here on the first time. It sold here. They started selling and distributing their profits here. They rallied up. They sold some more. Came back down up to here. They sold some more here. They left that level of value, and then right back to $3 again. They sold it, and then look what happens. The majority of the selling takes place. What's going on there? Any residual longs that were riding all the way up here, they sold out and added new shorts. Now new selling came in. Well, how can you see that? What's the interpretation behind that? Well, let's go back to volume. All right, so now we have that same premise, but now we're going to switch our perspective, okay? Now what we're going to do is we're going to measure, again, anything that we're seeing going up. We're not looking for that to be seen as buying. Otherwise, we would see volume increasing as we see this high here. It's been breached with this high here. So between these two reference points, there should be a higher volume node. So we have this nodule right here for volume, okay? And then we're going to look at this high here. So from this candle and this node on the volume and this one. So we had a higher volume here on this high, and then we had this higher high form with a lower volume node. So it's not new buying that's going back up to that breaker. It's just being repriced. That's all that is. So when that occurs, we know that this is going to be a selling point. This is distribution at an ICT bearish breaker. Now, how can you measure that? From this high, as price is dropping, then and only then should volume start to go higher. Each time it starts to move lower, we should see higher volume nodes. From this candle here, price is dropping. We took out these lows here. It should be done on high volume. These levels here, here's volume, and then we have price trading through it on this candle right there. We got it. Price is driving higher. All the volume, we went from low volume to high volume, and bang, large volume node, largest one. Now, this is not stopping volume as VSA would teach. Now, they'll teach you stuff like that, okay, but that's not what that is. It's not stopping shit. All it's doing is giving you an indication that it's going to go lower again. Where's it going to go? The level I called for where this liquidity is, right below this low. So, yes, we went back up and we consolidated, but what did we do? What were we actually doing in here? We have this low here, and we went back up into a range. What range are we looking at? We have another breaker. this big down close candle is the ICT bearish breaker for this run on this swing high. So this run on the stops, our eyes go right to here. We have a bearish ICT breaker. Price trades up into it. Sell, sell. Look where it stops. It's stopping at the top of that candle. Okay, and then boom, it hits what level? The 20 or 2.8 level. So we have that 80 phenomenon taking place. Hits it, and then we leave it. Come back up, mitigation, sells off. Where's it go to? $2 mark. Everything I said was going to happen. And look what it does. It goes there. Where's all this volume? Where's this volume coming from? That's everybody's stops resting right below there that was knocked out.